Okay, sorry for the clickbait title, but seriously, credit score rules can be weird. We've already covered a big overview of that stuff in our first video, and the second one got into some more specifics about what your credit score history is built on. This video is going to be more about some tips and tricks. Little things that can go wrong or little things that can go right. Either way, the little things can stack up. Let's get started. Tip number 1. Keep a high limit and a low balance. Now wait, you might say. You've already talked about this. Kind of a lot. Yeah, but here's a little tip to save you the worry about how low to keep that balance with a basic rule. If you owe more than half as much as your limit on a revolving credit account, like a credit card, it's doing a lot less for your score. If you owe less than half, it should be helping a good bit more. But if you want to do even better than that, less than 30% of your limit helps your score the most for this kind of thing. Below that is all pretty much the same, so anything under 30% and over 0 is really where you want to be for the best effect on your score. Tip number 2. Judgments may not be released when you pay them off. Judgments on your credit report are things like delinquent taxes owed and claims made against you in a small claims court. So if a court determined that you owe money to some entity, that will show up as a judgment. The thing is, even after you pay them, the judgment may not go away. The judge in the case won't magically find out if you paid the entity, and if you don't file a release, then credit bureaus won't know that you paid either. In some cases, especially when dealing with a large national company, the release will be filed for you after satisfying the debt. But with a lot of the smaller groups, the release is often just sent in the mail to you, and a lot of people don't do anything with it. They just assume that paying their debt is good enough. But if you get that release, you have to file it with your local courts. There's usually a fee for this, which is one of the reasons these go without being released, but the effect that judgment can have on your credit score will affect your finances a lot more in the long run than a little fee will today. One thing to keep in mind about this: if the judgment is more than 2 years old, getting it released may temporarily decrease your credit score. Remember what we talked about in the last video with items being more than 2 years old not affecting your score? Well, just the presence of a judgment, even one that's paid off, is negative for your score. So bringing it back into focus by paying it off, while good in the long run, will cause your score to dip a little for a few months. If you're in the process of buying a home or plan on doing so soon, I would suggest consulting with your loan officer before handling this kind of issue. It's possible the best decision will be to file the release after closing, and in some cases the release could just be filed with the other loan documents anyway. Tip number 3. FICO doesn't know what's in your bank account or what you make. Credit score isn't always my favorite method of determining if someone can pay something back, but it's the one we have. The reason I don't always love it is that it has some strange rules. The thing is, the rules for your credit score aren't relative to your financial situation. This just means that the rules don't care who you are, what you make, or how much you've saved. They just care how each credit line looks. Let me show you what I mean. Let's say you make $300,000 a year and you have $50,000 sitting in the bank. And then you go open a credit card at a local retail store to buy a laptop for $1,000. The first payment for some low amount, let's say $30, comes in, and you decide to pay the whole thing off next month instead of paying on that first bill. Well, that's a delinquent payment on your record, so that credit card is currently hurting your credit score the same way it would if you made $20,000 a year and had nothing in the bank. Even though the person with $50,000 in the bank can easily pay off the card, FICO doesn't know or care about that kind of thing. It only looks at the credit lines themselves. As strange as that kind of rule is, the fact that credit score matters so much could help you get on your feet with financing, even if you don't have a lot of cash available. If you follow the tips in these videos and take great care of your credit, you may be able to secure financing based on how trustworthy your credit score makes you to financial institutions. Okay, I'm not going to promise that that's our last credit score video, but it's probably enough for now. If you have any questions, don't forget to leave them in the comments or email us directly. Thanks for watching.